Is the Singapore market really out of big opportunities this October, or are there gems hiding in plain sight? Today, I'll reveal the 5 SGX listed stocks with the highest chances to rise this month, and I promise, we're not chasing old headlines or yesterday's darlings. We're following the smart money, where institutional investors are parking billions and where real earnings and catalysts hit now. Hey everyone, I'm Iggy from the Investing Iguana. Quick brag. The Investing Iguana was ranked 8th in Tiger Broker's 2024 Influential Tigers. We've just crossed 1 million post reads and racked up 58,000 likes. And if you're one of my 600,000 plus watch hour crew on YouTube since August 2025, shout out to you. I've produced over 1,000 videos as your investing buddy, keeping tabs not just on Singapore, but all major regional and global trends. This video is adapted from my latest deep dive on Substack, and here's what you'll get today. First, the investor problem and why usual picks don't cut it. Then a fun walkthrough of each stock with stories, examples, key numbers, and screenshot moment tables you'll want to check out on Substack. We'll wrap with my professional verdict, actionable tips, Singapore style, and a challenge for you. Plus, your invitation to join our Substack community. All right, picture this. It's October, you're scrolling through STI's 20% rally stats and thinking, I missed the boat again, la. But here's what most investors miss. The next big gains come from stocks with real fundamentals and upcoming moves, not last quarter's winners. Let's dive in, starting with the table 1 from the article. Imagine 5 stock tickers, each a titan in its own sector. ST Engineering for defense, DFI Retail Group for Asian consumer recovery, Jardine Matheson for that juicy conglomerate discount, DBS Group for banking leadership, and Keppel DC REIT riding the unstoppable demand for data centers. Story break. Imagine Singapore's own defense giant, not only weathering global storms, but absolutely thriving. In 2025, ST Engineering soared 86% year to date. Why? It landed almost 9 buy-buys in fresh contracts, boosting its total order book to a monster 31.2 B. Put simply, customers globally trust them for not just hardware, but digital defense and cybersecurity too. Singapore's continued investment in security is no joke. Plus, as global travel comes back, their aerospace segment takes flight again, even if a softening in global travel could slow them down. But their diversified model, with a rock-solid anchor in government contracts, gives downside protection. Do you see why I sometimes prefer boring, meaning time-tested cash printing, over high-flying tech? Now let's pop over to DFI Retail Group, your go-to for groceries or pharmacy runs in Singapore and Hong Kong. Earnings up 39% year on year? That's not luck. That's a bet on the Asian consumer who's back in stores, eating out, and rewarding companies cleaning up their act. Managers move. They sold off their Singapore food division for 125 billion. That's discipline. And their U Rewards Club? Smart way to hook loyal shoppers. The risk is real too. Intense competition and rising costs from rent and labor. Their edge comes from strong brands and smart cost management. Watch for continued earnings momentum this October. When my mom swaps from one pharmacy to Manning's for her vitamins because of a loyalty point bonus, I know DFI's strategy is working. Let me drop a life lesson. Sometimes, the slow burn underdog wins. Jardine Matheson trades at just 0.62x book value, yet it delivered a 52% YTD return. It owns chunks of Indonesia's Astra International. Cars, banks, farming, the works. Net profit up 45%, and the conglomerate, though discounted, offers deep, diversified Asian exposure. October's kicker. Indonesia's economy is humming. Sure, regulatory risks linger, but with Asia's growth recovering, Jardine's diversified bets could stand out. It's like having a kiasu uncle with investments everywhere, sometimes undervalued, but when Asia races ahead, he reaps the reward. Now, if you want stability and yield, look no further than DBS. It's 11.4B net profit for 2024, YTD return up 48%, and the best digital banking backbone in ASEAN. 18% return on equity, plus a massive dividend. Here's the cue. But aren't lower rates killing margins? Good thought. Yet, lower rates can boost loan growth and cut defaults. And with their growing fee income, DBS is built for all seasons. October's results might shake out a few nervous hands, but long term, it's a powerhouse. My viewers' poll on safest Singapore dividend bet, DBS came on top because in SG, bank quality and payout record matter. Finally, the hottest trend, AI and digital infra. Keppel DC REIT's data centers stretch from Singapore to Europe. In 1H 2025, they ramped gross revenue 34% and distributions per unit by 12.8%. Preferential offering this October? Existing unit holders might love that. Issue: interest rate hikes? Always a risk. But strong leases and big-name clients help this REIT weather the storm. AI data demand keeps ramping up. Plus, Keppel Group, as a sponsor, means future pipeline is strong. I visited one of their data centers and was wowed by the scale. Row after row of humming servers powering the region's cloud. For the full tables, dividend breakdowns, and my model portfolio, check the written playbook on Substack, link down below. So, let's tie it all together. Every investor faces FOMO in a hot market. Instead of chasing last month's winners, I look for the 3-in-1 combo: fundamentals, catalyst timing, and real sector strength. In October 2025, these 5 names tick those boxes. Growth chasers? That's ST Engineering. Value seekers? Try Jardine Matheson. Want yield? Don't sleep on DBS and Keppel DC REIT. And don't underestimate Asian retail revival. DFI's a play on that front. My advice for Singapore investors: don't just buy the story, dig into the numbers, the catalysts, and the management moves. If you had to pick only 2 of these names for the next 6 months, which would make your shortlist and why? Share below. To recap, today we surfed through Singapore's top 5 stocks likely to outperform this October, anchored in real numbers, clear catalysts, and steady frameworks. We talked defense, retail comebacks, value giants, banking quality, and the rise of Asia's data centers. Don't follow the herd, follow the signals. If this episode helped you think sharper or made you money, tap like, share, and subscribe. Want all the charts, tables, and my next level research before anyone else? Join the Investing Iguana community on Substack. Premium and free memberships, both welcome. Curious about Singapore REITs or the next digital growth wave? Check out my next video, How to Beat Inflation with SGX REITs and Defensive Plays. It's a perfect follow-up to today's theme. Remember, invest wisely, stay curious, and may your portfolio outgrow your wildest animal spirits. I'm Iggy, signing off. See you in the next video.